Welcome back to Golden Rule Radio, a weekly summation of the precious metals markets. And for the purpose of protecting families and their portfolios in uncertain times, we focus each week on what's happening in the markets related to the metals and the news that moves those markets. This week, in regards to gold, silver, platinum, and palladium, we've seen some stability here. Miles, you want to take off and run on the subject of gold?
Sure. Gold continues its climb up over the last 3 weeks. We're now up over 10% again for the year, and we're only about $30 off the high that we put in, I believe, back in March or April. However, there are a couple technical indicators, I think, showing that we should see gold hit an interim top with a slight pushback down. I don't know if we'll see price break below our recent low of 1225. We have a pretty firm upward rising trend line at that point. However, we could see a decent opportunity for gold buyers in the next week.
Gold is resisting that 2-4 line if you look at the Elliott wave theory, and has been just kind of following along that line. So that's one of the indicators, as well as divergence.
Do you still see us moving past the 1295 high that we set before? And
absolutely.
If we do,
yeah, ultimately, yes. Okay. Again, interim break in the gold price before we continue back up.
So you're saying buy if we dip down towards that 1225 to 1230. If we're setting a higher low, maybe in the 1230 range, you should be stepping in.
Sure, and if we inch below that, which can happen, we've touched it 3 times. It's stepping up each time we touch it. So if we dip below that, I'd be backing up the truck.
Robert, what about silver?
Silver is also seeing bearish divergence, and it's going up into the resistance in the mid-18s, I think. And will the 4th time into the 18s be the charm to break that 1850 level?
Well, I certainly think it could be. I mean, we had rising highs and rising lows for a while. Then we hit the top resistance level in that mid-18. We had a pretty decent pullback off of that 3rd touch into that price. I think that probably took out a lot of the standing bearish orders. So I think even though, like gold, we'll probably see a little bit of a respite in the price here, a little bit of drop in silver, I don't think we're going to put in a lower low. And as we continue further up, I think we're going to hit and then eventually break right through that 18.5 mark. Next target, just like gold, is going to take us to the pre-election highs of last year when we were looking November, December, and I think silver was up over $20 at that time.
And it's worth noting that the gold-silver ratio is down 3 points. It's down into the 72 range from 75, which is showing silver strengthening.
Yeah, and if we see those prices that you guys are discussing and we get up to that 1860, that's, Robert, to your point, we're going to see that ratio back below 70. You know, we spent a lot of months in the high 60s. So, yeah, if we see those points, expect the ratio to come down, which means silver will be proportionally outperforming gold.
Hitting the sister metals quickly, platinum and palladium. Platinum is in a compressing pennant pattern, sitting just above where we started, actually the 2017 rise. So we're still only up about 4.5% there. I think platinum's coming into a decision point here in the low 900, high 800, low 900 range, maybe around 925. We're going to see a breakout. I think to the upside. We'll have to see how that goes. The reason I think to the upside is because of what Palladium's been doing. Palladium has been pretty much only upside. It's also making a compressing pennant here, although a rising pennant. We had another massive jump up in Palladium over the last week. We're looking at breaching the 2017, even the 2016 and 2017 highs. I think Palladium's about done, may have one more good run up. And the higher I see Palladium get, the more platinum I actually want to own.
Moving on to the other markets, the Dow has failed to break that previous high, and even in the intraday candle wick that shot up, it failed to get above that previous high close. So it is looking like it will move down and try to fill those other gaps that we've been talking about for weeks.
Yeah, we record on Wednesdays, and on Wednesday last week, we had moved right into that declining trend line. And then, of course, Thursday, when we posted our show last week, and I mentioned the declining trend line, it gapped open above that level. As Robert mentioned, though, even intraday, it failed to continue to rise. So this, to me, is a lesser but still pertinent example of how market manipulations work. Clearly, when you have an overnight position placed large enough to move the Dow up substantially, however, you had no follow-up from the general market saying, yeah, let's continue this march up. So I agree with Robert. I doubt we'll see a new high in the Dow anytime soon as driven by the general market. I still think a 5 to 6% sell-off in the Dow is absolutely necessary. Honestly, I think a 15 to 16% sell-off in the Dow right now is necessary, even just from a health standpoint of the markets.
Do you think the S&P is going to be an anomaly? I mean, the FAANGs have teeth right now, right? I mean, that's Facebook, Apple, Amazon, Netflix, Google. Those are really leading the charge on the, in the race to the first $1 trillion company. But do you guys see that following suit?
Well,
the S&P market?
If they have teeth, then what do teeth do? They bite you.
Well, you have to look at, okay, take Amazon. Amazon's PE ratio right now, I checked this morning, was 166. So owning shares of Amazon, or at least the market capitalization of Amazon, will break even 166 years from now. That's how PE ratio works. So, okay, 20 years on, so I checked a couple other companies, especially on the Dow. Coca-Cola, I think's at like 20, Apple's at like 16. Why are people leaning more towards these tech-heavy positions?
It feels a lot like a late 90s tech bubble, doesn't it, forming all over again? And I'll tell you why. I mean, you alluded to the markets being rigged. They are very, very rigged. This is fraudulent. And it's not just the FAANGs. I'm not talking about that. But when you've got the European Central Bank and the Bank of Japan pumping $200 to $250 billion a month into the markets, what do you think is going to happen? And of course, the most attractive and easily sellable investment is going to be in those tech stocks.
Well, and I think there's a second thing here too, in that the old guard seems to be rigging the old guard markets. You know, the Dow appears rigged to me when we see those gap opens and we see some of the different movements that we've talked about in the past, when we see bear rate action, like I mentioned a couple weeks ago on our show in the gold market. But that's old guard markets. You know, that's 3M, that's Johnson & Johnson, that's manufacturing companies, GE. We're talking about companies that exist purely in the form of ones and zeros. And I think that's where the extraordinary exuberance of the average investor is directing their money right now, because they're looking for those exponential gains, because it's a delirium almost.
It is a delirium, and it reminds me of, the book Extraordinary Popular Delusions and Madness of Crowds. Everything's getting overpriced and running out of steam, but how long can these central banks keep this up? Can it be sustained? I mean, you've been fighting central bank intervention for years if you've been predicting an equities market downturn. At some point, we know it rolls over. It's just really hard to predict timing and the ultimate high price.
If you're a buyer of some of those FAANGs and other stocks and cryptocurrencies possibly that are going to the moon just at an exponential rate up right now, you should familiarize yourself with Tulip Mania in that book that Tori just mentioned. Tulip Mania. Go look it up.
There you go. So switching gears here, we're 2 weeks away from a probable June rate hike by our own central bank. The Fed is, given all indications that they're going to raise rates. Is it the last one of the year? And, have we seen it priced into gold already, or when will we see it priced into gold if in fact that increase occurs?
Well, it's certainly pricing into the U.S. dollar, down 6% so far this year, and coming into some of those initial levels that we had talked about. Dollar's back under 97. I called 96.5. Obviously, after I called 104. So we're looking at the dollar coming into that. I think that's pricing in for the expectation of a rate hike. And gold has been rising. In fact, if you look at the numbers, we mentioned them earlier, gold is actually up about 0.5% more this year than silver is at this point. Silver's had more volatility, but at least as of today, gold's up slightly better than silver. So yeah, I think there is a little bit of efficient market hypothesis built in here with the expectation of some rate hikes.
I get the feeling that if the dollar index holds that 96.5 level, which is also a fib level, I feel like it could run up. Where the euro could sell off because it's had a nice run. This is just a possibility. The euro could sell off, the pound could sell off, and it could drive that dollar index back up into that 100 range just as kind of a reaction before it heads much lower, which I think it ultimately will be headed lower. It seems like it has really carved out its direction in this channel down from 103 down. But since it's come from, failing that 100 level and it's come down into that 96.5 support level, it could have a bounce back up because of some other currencies.
Robert, I totally agree. And I think that it's going to work out timing wise to see it be the impetus for why we see gold go down to about that 1230 level, because it should strengthen the dollar if they raise the rates one more time. We should see a little bump in the dollar index, to your point, and then it's going to all turn, and that's when we're going to start seeing the dollar drop further and gold go higher.
I'm just talking about that as a possibility. Might be just a speculative possibility, but if the dollar were to not do that, and if it were to be breaking that 96.5 level, you are in another move 3 or 4% down into the 92 level, I think.
Right. And that will drive the gold price up. But we need more than just currency fluctuations or movement to be driving the precious metals. I mean, gold and the dollar were both down on Tuesday of this week. We need bigger news. The geopolitical scene has been quiet, relatively quiet with the Trump tour, and there just hasn't been quite the main headline news that's been putting wind in the sails of the precious metals.
Relatively quiet is the best way to put that, because people seem to be just jaded to big news. Numb, jaded, dumb to big news. I mean, there are some major things going on in the world.
Well, let's see how the markets react to the payroll data that's out Thursday and Friday. We should see a little bit of market fluctuation from the ADP payrolls on Thursday, non-farm payrolls out on Friday, and that'll transition us right into recommendations, guys.
Seriously, get out of the stock market.
Seriously, look for exit points in the stock market.
You don't care if the Dow goes up another 10 or 20% from here. You'd rather be early than late.
I'm okay being early and then perceived as being wrong because I'm early, because you can't afford to be late or wrong when the next crisis happens.
Well, 2008 is certainly still fresh in our minds. Many people may have forgotten at this point, but we certainly don't. And we know that markets cycle.
And go back and look at what the precious metals did from the first of the year in 2009. Well, on that note, we promised that we'd keep you informed in terms of the upcoming conferences. Don and David McAlvany will be on tour. We're going to hit 5 cities this summer. The first 2, July 14th and 15th, will be in Palo Alto, California. July 25th and 26th in Bellevue, Washington. Call us at 800-525-9556 and we'll give you the details and you can RSVP. Otherwise, please subscribe by clicking the subscribe button below and follow us on Twitter at ICA Gold. We appreciate you listening again this week. And on behalf of Golden Rule Radio, this is Tori signing off.
Thanks for listening. Have a great week.